What's going on, everybody? This is David with Housing Alerts. In this video, we're going to continue with another market report. We're going to continue our discussion on the worst markets in the United States right now, plus your chance to win your very own Housing Alerts Gold account valued at $300. You don't want to miss it. Stick with us. It's all coming up next. Okay, so here's the rest of our worst markets. We have Puerto Rico, we have Charleston, West Virginia, Wheeling, West Virginia, Alexandria, Louisiana, Huntington, West Virginia, Decatur, Illinois, New Orleans, Louisiana, Corpus Christi, Texas, Jackson, Mississippi, Johnstown, Pennsylvania, Montgomery, Alabama, Ocean City, New Jersey, Bridgeport, Connecticut, Bloomsburg, Pennsylvania, Oklahoma City, Oklahoma, Fairbanks, Alaska, Little Rock, Arkansas, Monroe, Louisiana, Oxnard, California. There's Chambersburg, Pennsylvania, Casper, Wyoming, Longview, Texas, Champaign, Illinois, Hartford, Connecticut, and Lawton, Oklahoma. All right, so what you'll notice that we did once again is we took our Hot Market Finder tool, which is a tool which tells us what markets are hot right now, and we just sorted it in reverse. We took that same search that we did on our Hot Market Finder tool, and we sorted it from worst to best. Now, in our previous video, we went over numbers 1 through 25, starting with Peoria, Illinois, and we concluded with Ithaca, New York. And in this video, we started with Puerto Rico, and we concluded with Lawton, Oklahoma. This gives me the opportunity to kind of point out how powerful the Housing Alerts tool is. So you see, and I'm just going to take an example of one particular market that I think it's important to point out, Bismarck, North Dakota. Now, back in 2012, Bismarck, North Dakota was a market that we pointed out was starting to go into a wealth phase.
All right, everybody, it is contest time here at Housing Alerts. For the month of February, we're going to be asking some questions throughout our videos. Simply answer the questions below in the comments section, and we're going to automatically enter you into the contest to win a free Gold Housing Alerts account valued at $300. Enter the responses to the questions below as I ask them throughout this video. There's going to be a total of 3 questions in the video. Answer them in the comments below, and you'll be automatically entered into the contest.
But before I do that, I'm going to bring you my first question.
All right, here's your first question. I'm curious to know what type of investor are you? What type of investing are you involved in? Are you a wholesaler? Are you into buy and hold? Are you possibly doing commercial real estate where you have multi-dwelling units, or are you doing something else, some other type of investing? So 1 through 4, 1 would be, are you a wholesaler or a flipper? 2 would be, are you into buy and hold type of real estate properties? Number 3, commercial real estate. Or number 4, something else, tax liens, subject tos. Whatever the case is, comment below, let us know 1 through 4 for your first question, and your second question is coming up soon.
All right, back to our study. Here we go. So as I mentioned, we're going to take a look at one particular market, Bismarck, North Dakota. So if you take a look at Bismarck, North Dakota, it was showing early signs of market improvement in 2012. Now, if you look at this chart here, or what I'm looking at here is the momentum indicators of the Bismarck market. You notice that there's 3 different color lights on this momentum chart. There's red, there's yellow, and there's green. So the green lights obviously give us a good positive indicator. The red lights give us a negative indicator. And the yellow lights are giving us, depending on the transition, they're either giving us a going in the right direction indication or going in the wrong direction indication. So it could be either of the two. Now notice in 2010 quarter 2, we see a green signal coming in, and they start to populate more as we go from quarter 3 of 2010, quarter 4 of 2010. Some stuff's going on there, but notice how the reds are moving out on the right hand side. So as you come up this, or move up this momentum indicator, notice then in 2012 first quarter to 2012 second quarter, we see 4 green light indicators come on, and then in third quarter of 2012, all the green light indicators go, or I'm sorry, all the momentum indicators go green. That tells us we're entering into a wealth phase. You can see it a little bit better on this chart right here. In 2012, quarter 3, we see that huge spike going up, and you see that it enters in what we call a wealth phase, and we see the green highlight there over that blue line. Now, just as a side note, if you notice the 0% line, that is 0% appreciation. Anything above the 0% is when your property is gaining appreciation. So if you have a property in this market and you're riding that blue line, that entire time that property is riding appreciation or gaining appreciation. I'm sorry. So what you need to notice here is that when you look at this chart, this is not an indication of price values of your property. This is an indication of the appreciation that your property is gaining. Anytime that blue line spends above the 0%, your property is appreciating. Anytime the blue line spends below the 0%, the property is depreciating. So in quarter 3 of 2012, while the market was still staggering, while there was still some fallout from all of the poor bank loans, the banks were going under, the mortgages were going under, we found a market, and Housing Alerts called a wealth phase for the Bismarck, North Dakota market. So you see an indicator here that this says, wait a second, this is a good market to take a look at. And you notice in 2012, all the way to 2016, right around quarter 4 of 2016, is when it went out of its wealth phase. So in that amount of time, from 2012 quarter 3 to 2016 of quarter 4, Bismarck, North Dakota had a nice wealth phase there. Now, in 2015, it started showing some signs of decline. So before it fell out of its wealth phase, we notice here in quarter 2 of 2015, we see 2 of those indicators, the momentum indicators, going red. Quarter 3 of 2015, 4. So if you had a property in this market, you would have been getting indicators that this is going in a negative direction. And all the way up until, if we notice, for example, in quarter 4 of 2016, when all of the momentum indicator lights go red, that tells us Bismarck is now leaving its wealth phase. So now the property is going to start to either go flat or possibly depreciate. So that was the indicator for folks who had properties in Bismarck, North Dakota, and is why it's sitting right now on top of one of our worst markets. Now let's and again we see here in the chart, it exited its wealth phase in quarter 4 of 2016. You can see that nicely on the wealth phase chart. So now let's have a little bit of fun. What I want to do is assume that we bought an average property in quarter 3 of 2012 at full retail. We didn't get any special deals. We didn't get anything. We didn't get any short sales or bankruptcy or bank liens. There was nothing extraordinary about this property. Before I get into that, this is a great spot for me to ask question number 2.
All right, here is your second question. Simply comment below. Let me know, are you investing only in your backyard, or are you going into different markets across the country or elsewhere? Are you only investing in your backyard, or will you go outside of your existing market if you knew the right opportunity was elsewhere? So curious to know that. That's your second question. Comment below. Your third question is coming up next.
All right, here we are. We are back. We're talking about our property in Bismarck, North Dakota. We bought it at full retail. Here's our property, and we paid $200,000. So again, no special deals. $200,000 is our investment, and let's just assume that we got an average loan. And in our average loan, we paid 10% down. Out of pocket, we put down $20,000. So again, Bismarck, North Dakota, 2012, quarter 3, we find an average property, $200,000. We put 10% down, and let's just assume that you just got average rent. Average rent, and your rent covered your expenses. So you made $0 on rent from the period of quarter 3 in 2012 into quarter 4 of 2016. And let's just assume then again you sold the property in quarter 4 of 2016, and you only gained the appreciation over the time period of quarter 3 2012 to quarter 4 of 2016. That's all you got. It was just the appreciation. There was no positive for the rent. So again, take a look here at the wealth phase chart. 2012 we got in, 2016 we got out, quarter 4, and let's take a look at the numbers. So the total appreciation during the wealth phase would have been 29.2%. 0.1%. What does that mean? Well, we sold it in quarter 4 of 2016 for $258,212. Oh, so we bought it for $200,000, sold it for $258,212, and what that nets us is a total profit of $58,212 just by following the wealth phase chart here in and the momentum indicators in Housing Alert. So the gross ROI, if we take a look, is a whopping 291%. And this is a perfect time for me to pause and ask question number 3.
All right, here's your third and final question. I'm curious to know, what type of tools do you use to help you in the process of investing in real estate? What tools are you using that can help you do whatever to make decisions when it comes to making a real estate property investment? So just curious to know what type of tools you're using. Comment below. Those are your 3 questions. That's the third and final one. Once you enter all 3 answers, you're entered into winning your Housing Alerts Gold account worth $300. See you soon.
All right, so we gained a whopping 291% gross ROI, an average for the annual ROI, what we received over the course of the time period from, again, quarter 3 2012 to quarter 4 2016 is 78%. I know that sounds crazy. I mean, if you think about it, if you were to invest in a CD or in a some type of mutual fund or whatever the case is, wherever you put your money, name a single investment where you could have gotten 78% year over year for that time period. It just didn't happen. Now, again, the current CD rate is about 3.15%. Let's just assume that back then at 3.15%, I mean, really the reality is that back in 2012, I know for a fact CD rates were a lot lower, but let's just say, again, 3.15% in this time period, we would have had a total profit of $2,641 versus a total profit of 291% at $58,212. You make the choice. Obviously, you being a smart investor, you're going to look at the bottom one there, $58,212, just by using the information from Housing Alerts. And you're not using any additional strategies in this scenario, like finding short sales or tax liens, or possibly even looking for bankruptcies, or anything like that. We're not using any special strategies here. We're just using Housing Alerts wealth phase chart and the momentum indicators to let us know when it's time to get into a market and when it's time to get out of a market, and we're riding the appreciation of that property. That is it. And that is the power of Housing Alerts. That's what I want to make sure that everybody sees here. That is the power of Housing Alerts and how you can use Housing Alerts for your investment decisions. So don't forget, thank you everybody for joining us. Don't forget to answer the 3 questions below in the comments for your chance to win a gold account valued at $300. There's even some talks about us possibly offering maybe even a second account this month. So stay tuned for that. But don't forget, make sure, answer the 3 questions below in the comments section. Let us know what you think of those 3 questions, and you'll be entered into the contest. Also, if you have any questions about this video, please enter in the comments below. We'd be happy to answer. We're very quick to get back to folks on their comments. We love getting feedback. Any questions you have, let us know. And we will see you again on our next video soon. Again, sorry, one last thing. Apologize. Don't forget to hit the notifications at the top of the page, and you'll be notified every time we have a new video. Thanks so much.